Hello, everyone. This is Travis the Trader coming back to you live on Wednesday, September the 11th. I just uploaded a video talking about /ZB, and that ZB is the 30-year Treasury bond futures. And as I was talking about other ways to trade the 30-year bond futures, there is a micro 30-year bond future. It's 30-year, they call it the 30-year yield futures, where you're trading the yield, right? So as I mentioned before, in ZB, when the price goes up, the yield goes down. But when the price goes down, the yield goes up. This is different. This is just, you're just trading the yield on the underlying product, which, as I said, is /30Y. But one of the things I noticed, and I did put this in a video, gosh, maybe been several months ago, but if you notice, the 2-year note is now trading the yield. The yield is 3.56. The 10-year is 3.65, and the 30-year is 4.4. So what that tells us, what tells me, is that probably for the last almost 2 years, we were in an inverted yield curve, meaning that the long term, the 10 and the 30-year notes and bonds, the yields were lower than the 2-year, than the short-term bonds. Now that yield curve has been uninverted. Now we're, I guess if you want to call it a normal yield curve, where now the 10-year note, the 30-year bond is higher, the yields are higher than the 2-year, than the short-term note. Now, what does that mean? I've spoken to people about this. I've read books, go to different presentations. Supposedly, an inverted yield curve as it comes out of its uninverted yield curve, a recession apparently might be coming. It's coming our way. How big? How long? Is it going to be a hard landing, soft landing? I really don't know. I really have no idea. And again, we could look at the history, we could look at the facts, but as you know, markets are random. And what might have worked or what might have happened 10, 15, 20 years ago may not be the same this time around. It could be worse, it could be better. I really don't know. But the purpose of this was to just let you know that right now, in this environment that we're in right now, the yield curve has been uninverted. We are now back into a normal yield curve where the 30-year yield is higher than the 10, as well as the 2, and the 10-year, which is lower than the 30, is higher than the short-term 2-year note. Keep that in mind. Again, love to hear your thoughts on this. I don't know from a trading perspective if that helps you or not, but it's just good to give you an idea of where we are with interest rate futures. Again, are we in inverted yield curve, a normal yield curve? Because this can obviously benefit us in making a better decision, not just to trading, but for those of you who might be in some kind of a lending business or real estate business. This can, of course, help you decide as to the different sorts of financing details with whatever sort of real estate you might be looking to buy or sell, or whatever the mentality might be. Again, if you found this video helpful, please subscribe. Please give me a like button. Let me know your thoughts in the comments section. And of course, I look forward to seeing everyone at the next video.